Hello and good morning, friends. Welcome to Stock Analysis. I think the last two sessions with Nifty and Bank Nifty were really exciting, and I'm certainly sure that you would have had some good trading sessions. So, if you are new to my channel, I'll request you to subscribe to the channel and share the videos that so many people all around you can learn from the videos and start working as to how to trade in the market. At this channel, for those who have come for the first time, I just like to briefly say that we do the predicting of Nifty and Bank Nifty for the next day with respect to the NSE data and technical analysis. So before we move on to the data, let me just go through what happened in Nifty on Friday. So here you can see that Nifty closed at minus 5.9 points, a drop by 0.06%, very marginal gap. And while VIX was around 38.2, Nifty opened at 9182, made a high of 9182.4, and closed, the previous close was 9142, low was 9050. So here you can see the range in which Nifty is trading, and this is the 52-week high 12,430 and low of 7511. So you can see there's so much of gap, and Nifty is almost very close to this figure, these figures, but then certainly a lot of movement to happen to reach to those figures, and nobody would be expecting and nobody would like that Nifty should go on to those levels. Here I have put up the data as to how Nifty has been giving returns. Why did year till date minus 24, on a weekly basis minus 6, on 1 month 2.4. That's really exciting. And on larger levels, you see last 3 months, 6 months, it's all negative returns. And here on the chart, if you can see the summary of this chart, here you can see that almost this was the levels in which Nifty started on Friday and it closed on these levels. So certainly it's been trading between a range of 9150 and 9050, not much of a difference, but certainly at some point of time it goes up. In the morning there's a lot of volatility, and then you have a lot of consolidation for almost till 12, almost 12:30 or so. Then you have some peak movement and consolidation, and then you can see the movements happening after 1:30, around 1:25 or so, and then you can see the index moving up to a real high, coming down, and then definitely consolidating. So why I wanted to show you this chart is of significance as to when we see through the data and when we analyze the data, we'll come back to this chart and definitely know as to how this chart is relevant. So do watch the video completely to have a complete understanding of the subject. And in terms of Bank Nifty, the performance was minus 1.23, open at 19, made a high of 19119, low of 683, and then finally this is the close, previous close. So 52-week is at 32 and low is at 16. Again, in terms of returns, minus 41, far more volatile than Nifty, as we all know, and all the returns are almost negative except monthly return is of 0.1%. Again, for Bank Nifty, if we see the movement was in this way, almost 18,800, and then you see again some kind of upward move, then consolidating for a long time, almost with small ups and downs, and then you peak up, then again consolidate. So these are the levels which are actually operating, where Bank Nifty is operating, then coming down, and then finally making up a peak, and then ultimately consolidating and closing a bit low due to the sell-off pressure. So let's go down straight to the advanced decline comparison. 684 stocks were positive, 842 negative on the whole, and you can see almost Nifty 50, 23, 26 almost balance, next 50 also balance, almost majorly you see kind of balance movement in terms of stock, but although still That is why you don't have much of a movement, and we've been speaking for a long time that Nifty is in a consolidation phase, and this will definitely check with the technical data to understand. In terms of the Nifty pullers and baggers, Reliance and Bharti Airtel were the showmakers, and while we have ICICI and Axis Bank bringing it down. And then in terms of sector movement, Nifty Metal doing well with my 1.161 and Energy with 1.104. But Nifty Media, which had done earlier last year well, a lot of sell-off happening. So here you can see, if you compare this data with the previous data, you see that one of the sectors moves one day, and then you see the sell-off on the sector, and definitely it's on the red side. And then again you see this sector moving up. So like, keep in mind, Nifty Metal did well. Now in coming couple of days you will see that there are a lot of sell-offs here, and it would be lying in the red zone. So let's get on to the data, very important data, and you can see a lot of movement in terms of unwinding by the FIIs in futures. Sharp unwinding you can see from 11th onwards. So that is why, the reason is that they've been started closing up the positions which they build up over a period of time, almost from 28 April onwards, and these positions were from something around 12th of May. They unwinded some positions, then they had some steady build up, and then they are unwinding. And while on the opposite side you can see the the clients actually building up positions, going bullish, while you can see the FIIs mostly on a bearish note. So naturally the FIIs are playing in the market and definitely making up the moves in the market, but you can see different players operating in different zones. That is why you can see a flat movement in Nifty, because no two players are working together. So mostly in terms of volume also, you see the DIIs on going bullish on the front, and then you have the pro desk bullish, while you have the client and the FIIs, mainly the clients being flat, but the FIIs being bearish. So that is why you can see all kind of movement in Nifty. And then in terms of volume, which I have been talking about, that the FIIs are mostly operating in the market, they are dominating the market, and that is why the intraday movement is huge, which you can see here in the graph, that a lot of movements happening, going up, consolidating, because positions have been built, and then finally selling off, and the day you can build, taking it up, bringing in positions, coming, shorting. So all these kind of things are happening in the market, and the FIIs are actually playing well in the market. That is why market is really moving in all sides. In terms of stock futures, a lot of positions there with the FII still there, but they are slowly and steadily unwinding some positions in selective stocks, definitely. And while in terms of the FII and the clients, you can see some build up in position. The DI is also unwinding and going short in many of the stocks, so definitely signaling, this is a great signal that definitely the market is bearish and tends to remain bearish, because you can see their positions from almost 28 April onwards, steady positions, and going more downwards, building in more short positions. So definitely the market would remain bearish, while in terms of FIIs, they do hedge on both sides. So definitely you have long positions also there, still wide open. In terms of stock futures trading volume, you can see a lot of movement basically from the DIIs, mostly FIIs doing some bit of work, but on the other side, while the clients and the pro remaining bullish on the front. So naturally, when you have the DIIs and FIIs working to the, naturally you can expect the stocks to move down. But in terms of stocks, the FIIs have been mostly silent. In terms of index option, lot of huge gap building up in terms of index options here. While you see the clients going up bullish, building up long positions, while you can see the FIIs unwinding their positions, DIIs and all these unwinding position. If we talk about almost something along 1.5 lakhs position almost here in total of this, and around 2.5 lakhs. So overall, that is why you see that positions been built on either side, so definitely making the market move flat. So this is one of the major reasons why the market is moving flat, or rather it is consolidating, because everybody is building his or her position as per their needs, as per their requirements. But definitely, since FIIs are more silent these days, you find the market to be basically flat. In terms of trading volume, lot of movement we had on 14th by the clients, but on 15th very less, almost 1/10 of what they had, and the others insignificant. So in terms of index option, you don't see the FII is doing any role. Stock options, the FII is playing cool, not putting up much of effort. So where are they actually working? We'll find out through the presentation and see. In terms of stock option, again you find the clients being bullish, while the FII is unwinding some contracts, while the DIIs and the Pro, almost DI is stable, but the Pro building up short position. So naturally, these three players on the other side of the fence definitely looking for a bearish movement in the days to come. But we need to watch out for the FIS bit, because they put a lot of money on a single. They've got huge capacity. In terms of the movement, again you see the Pro desk having some kind of short movements, unwinding their contracts and definitely squaring off positions and making profit, while the clients are busy building up long positions, something around 20,000, but the volumes are very less. You can see the figure, maximum 40,000 and minimum 40,000. So the volumes are very less in the market. In terms of total contracts, we can see the FIIs are actually unwinding a lot of positions over last 3 to 4 days, while the clients are busy building long positions. We have the DIIs having unwind build up more short positions, and while the Pro people are building up some positions. On an overall basis, the markets, the FIS are still leading the market with a lot of positions in hand, and they are majorly long in total if we talk about. But in terms of net volume wise, you can see mainly market being operated by the clients. They are more active in the market, while you have the DIAs, FIS and Pro all on the short side. So definitely a lot of positions been built here, and I fail to understand where these bigger people start. On the other side you have the clients on the other side, which explains the reason as to why we have the clients mostly losing money in the market, because they are always on the wrong side of the fence. You have the bigger players here, then you have the clients here. So that is the kind of judgment we are talking about, because you need to judge the market with these kind of data. And then if we talk about here, we are looking into the figure of the FII cash. Again you see a lot of cash was pumped on 13th, then the 14th they pulled up a lot of money, and on 15th almost silent. It's less than 10,000 crores. So mostly selling happening in the cash segment, in the equity segment, and some kind of buying. So it makes me really feel that the FIIs are actually sleepy now. They are looking for good levels in the market to come. They might chip in a lot of money, but they are waiting for the levels to come. And in terms of DII, you can see a lot of movement by the DI, almost something like 30,000 crores coming in, pumped in, but it's almost equal in terms of buy and sell volumes. So definitely DIA playing a lot of role to on the yesterday, on the 15th of May. In terms of total trade statistics, we can see that 15th May the FIIs pulled in a lot of cash from the market. And in terms of future also, in terms of index also, you can see everywhere the FIIs are actually pulling out money. They are not pumping in money, and that has been happening since last 3 to 4 trading sessions from 12th May till 15th. You can see mostly all the figures are negative, some pumping in index option, but mostly cash and future segment. They are taking off, squaring off positions, taking off profits. That is why the reason you have only 3.95% contribution to the entire market turnover, 1.25. So these figures are so less, basically tells that the FIIs are waiting, definitely waiting for right positions in the market. And we need to watch out to these positions before we start looking for a longer trend. We start looking for good profits, because the market tends to remain flat unless these guys can pump in money in the market. In terms of the open interest, if we see, that we have got a lot of build up in terms of call at 9400, 9300, 9200. So definitely and in terms of put 91, 9000 and 8900 also coming into picture. So definitely you can see that these are the levels in which Nifty will definitely play, but mostly longer levels is around 9000 to 9400. We'll check out with this data in the technical chart also, and this definitely explains as to why it is happening. I'll let you know as to how it's happening. And in terms of put, in terms of supports coming up at 9000 and 8900. So majorly the market would remain flat, and then there's the levels in which we can expect, because some kind of call also been built up at 9100 and 9000 levels. So definitely we need to watch out. I think these are the levels in which the market might operate. We don't expect the market to fall drastically on Monday, but definitely I think it should be a bit more flat for a couple of days before we have clear cut picture as to where the market is going to move. But in terms of net open interest change, if you see 9400 levels, a lot of movement happening, and so a lot of build up happening at all levels, even 9000. So definitely this is signaling that these people are coming down at lower levels, and they are going to bring the market. But certainly the market is not going to come down in one day. It will be in a range for some more time, 9100 to 9400 for some more time, until unless you have some very strong signals, some negative triggers, before after which the market might break down on the other side, on the bearish mode. In terms of bank nifty, lot of positions at 19000 in terms of call, and 18500. So definitely signaling to be the range for movement of bank nifty on Monday. And in terms of build up also, you can see a lot of movement at 18500 and 19000. Certainly bank nifty to operate in these levels on Monday for sure. And before I move on to this positions, I would like to go on to the chart and make things more clear for you in the option chain. So let's see the option chain as to how option chain is behaving and what we can expect from the option chain. And certainly this option chain, we are at this position, and we see basically we can see short build up happening at both positions. Definitely this going, it's a signal that market would be in this range, no doubt, and it would be bearish, but definitely the market would move and come down. Let's check at the levels as to what we saw. 9300, almost 290 new contracts coming in at 10 lakhs, and then 546 at 9400, 17 at 9500 on an upper scale, 9800, 948. So a lot of people still building up contracts, like open interest at different levels. On the call side, 9300, and then at 9200 you got almost 89,000 contracts, and a lot of build up also. So definitely these are the levels to watch. In terms of put, 652, 962 at 9000, 8900 and lower levels. So if you see people building in contracts, because they definitely expect that the market would come down, it's now the market for the sellers, my friends. The market is totally dominated by the sellers, and when you have sellers dominating the market, they would like, because they are building up positions at all places in the market. So you need to understand, when you have open interest coming at all positions in the market, and you have short build up happening. So for sellers, if you go onto the option chain, for sellers, if the market is flat and slight movement is there, they will make lot of profits. They make money when their market is flat and it is having short build-up at both positions, and only slight movement are there due to the inherent nature of options and option selling. They make huge money, so they won't make the market move a lot. I don't think so the market is going to be very volatile on Monday. It would be range bound, and these are the ranges which we have been speaking to you, different levels on which market would operate. And definitely these are the levels we talk about. The market would operate in these levels only, so that they make huge money, because it's the market of the sellers. In terms of bank nifty, let's see what's the figure out here. Bank nifty giving us a different picture, because bank nifty on the call side you have short build up, but on the put side you have got long build up. So definitely the people at the put would definitely defend their positions and they will not let the market go down. So 210 at 18,500 levels are a major levels to watch. And then on the upper side, if you talk about 377 and lot of 216 new interest coming up at these levels, 457 at 20,000 levels. So it's a clear indication that bank nifty would be slightly bullish on Monday, and we can definitely, because the put raters here, they'll not let the market go down. They'll not let them go down, because it's a lot of long build up positions are there. So definitely the market would go up, and we'll have to watch in the entire day as to how the new open interests are coming up, because changes every moment. But slightly we can expect bank nifty to be bullish, definitely to go up, and we'll find out with the charts also. And let's look at the chart for nifty, and here that is what I wanted to show you. So if you can see, have a look at the charts, you can see as to this was the lowest level 7557, and this was a long trend line which has been broken off, and nifty has broken this trend line support and it is consolidating. So that is what we were talking about. Nifty is in a consolidation mode, and it will tend to consolidate until unless the FIIs build up some good positions in which they want to operate. So more or less nifty to remain consolidating for some more time. So, and if we dive deep into nifty and we'll see, then you can see that these are the Fibonacci levels in which nifty is operating. So almost it has come out of the wedge which we are talking about. So nifty is out of the wedge, and this is the area in which consolidating, and this was the long term support. We talked about this region of almost 9295. It has broken down, it has come out, and then you have a lot of consolidation, some moves up and high. This Nirmala Sitharaman candle, as we talk about, market moved up, came down to the own levels. Now possibly which we can talk about is that let's look on to this 1 hour data, basically, and where you can see that nifty is actually operating on certain levels. So these are the levels in which nifty is actually operating. With the two red lines, if you can see, these are the red lines in which actually nifty is operating. Let me put the candlestick so you can understand, because I think this will be on the daily basis where you can see, excuse me, I think it's on the yearly chart. So nifty is definitely operating on certain levels if we talk about, and these are the levels basically on a shorter time frame, where you can see these are the levels in which nifty is getting support. And so here you can see these levels in which nifty is working out, and definitely trying to come down to the levels, and these are the Fibonacci levels where you have a lot of support. On 12th also you found there's a small candle, the shadow coming, and then the nifty going up, and then you have a breakout and comes up, gap open, and then again comes down to those levels. So this level of almost 9052 is a kind of local support till the levels are broken down. So possibly nifty to be range bound in these levels only, which we have talked about, which we have discussed in the option chain also. In terms of bank nifty chart, if we look at bank nifty, again in bank nifty also we see that it has broken out of the wedge, came out of the wedge, and definitely consolidating. So bank nifty also we need to watch out as per the open interest data which we saw. So definitely bank nifty and nifty definitely on being in a range bound, and there's some kind of bullishness which we can expect with bank nifty. And then if we talk about the levels, so these are the levels to watch out. So almost 9148 levels we talk about for nifty, 9157, so almost 9020, so 9098 to 9148, almost something like 150 points which we can expect nifty to move around. And in terms of bank nifty, almost from 8751 to almost, it's a very small range, but definitely from 18807 points bank nifty to move around. So these are the levels you need to watch out, but majorly on the levels which we talked about in terms of the option chain which I showed you, these are the levels in which the indices will operate in terms of nifty, because you have different levels. You have the, I told you, the sellers market, so you can definitely see that bank nifty around these levels to operate. So I'll wind up the video here, and if you are liking my videos, do subscribe to the channel, share the videos, and we'll be there again on Monday with another video. And I've put in some more other videos in terms of valuation in the market. Do watch out, and stay healthy, stay safe, take care.